All right, Oracle got an alert for that today, and I think I must have done a few reviews on Oracle. And the last time I looked at it was way before all this price action happened here. Maybe had it into stage 3, beginning of a stage 4. But right now, this is a top pattern that's been forming. Lots of noise. Look at that, man. That is... Look at the symmetry on that in reverse symmetrical triangle. Or maybe they call that a broadening formation or megaphone. Morphed, candles added, sideways move, clearly defined, monthly defined. Breakout line. And check it out. Here is the implied measure move that is confirmed since actually a few months back, since February. With February's close, this is the target that's in play for Oracle. Wow. All the way up here, close to 59, above 59, very clear cut. And that's why when you close below 12-month average, you should get out of the way. 1, 2, 3, 4, like over a year. You get sideways move. You don't want to be around. Don't want to stick there. So that is the implied measure move, guys, for Oracle. Keep going up. I don't know if it's going to pull back and test and go back up. That is most likely to happen. Pullbacks, eventual pullbacks, or maybe this is going to have a crazy burst right there all the way to that target. But then you get away from that 12-month average, either sideways move or hard fall back close towards it, and then you wait for the whole chart to morph. Oh, look at the mess, Pat. Remove all drawing tools. Stan Weinstein, compared to the SPX, you want to be outperforming it. And look at that Oracle. Wow, one red candle since a while back. That is insane. Arrow. So this has been outperforming the SPX for a while. Inclining. When to start getting green? Right here. But from what I see, it would have been very hard to enter above here and inclining 30-week moving average. But if you'd be looking at a breakout line, weekly defined breakout line or monthly breakout line, and you'd have to wait for the price action to get a back above that, and then either go on the pullback, enter. But there's no volume. I've never seen on this candle right here. You want twice the average volume of the previous 4 weeks to really have a convincing breakout, and don't quite have it. How much I get here? 124 million, and the average is 88, 87. We're at 50. Oh, maybe. Yeah, maybe you do have a twice average. But I like it when there's multiple retests of that line before you break out. So definitely this has been consolidating for a while. And right now it's definitely after being in stage 2, stage 3, barely stage 4 right here, little red zones. But not out of the Chimoku cloud. Maybe here we could have got a signal to short, but we would have to look at the monthly defined support to know if the total weight of evidence would have permitted us to enter that short. But right now, that's it's on its way up, guys, Oracle. I just want to see if there's going to be any hiccups. Fast stock on the monthly. Are we in the power zone? Yep. Right now, really in the power zone, so that's where you want to be when you have those thrusts upwards. The fast stock, there it is. You don't want to hear it. So when we start crossing over, we're starting to drop, and you don't want to stick around when you're in a potential powerful trend in your back or against you. Okay, fast stock weekly. I like this one. It's a good compromise between the monthly and the daily. It's not super fast, but you use divergence for it. So that power zone. But here you see, look, higher highs, no divergence, very hard. Maybe some slight divergence right here. Yeah, here maybe just a little bit. See, fast talk can't make it higher, but the price action keeps screeching higher. Yeah, that's some bearish divergence right there. So before the monthly goes back down, this has to go back down, and if that ever consumes, and then we could get the fast stock in oversold territory, then slowly the fast stock on the monthly is going to start staying around here, and then you'll be in the power zone, and then you'll have fluctuations here. The fast stock might come out, go back in, create some divergence. You consume that divergence, and then the price action explodes. Here we had some lower lows, slightly higher highs, higher lows, and then bam, you explode, bring the price action. But there's nothing. Maybe here, this is going to indicate maybe an eventual pullback close to that breakout line, and then we'll see if that that resistance turn support is going to help you. You'll get back closer to that 30-week average, and then if this on contracting volume, you could probably have a good entry right here, low risk environment to enter. But again, haven't forgotten about that economic data. I'm waiting for it to mature some more, and we'll see. So all these breakouts, it's delicate. I still believe that this could pan out or burn out at any moment. Maybe by the end of the summer, if the total non-farm payrolls maybe start getting negative, unemployment rate if it keeps creeping up, and all those other metrics, they're still there, and I'll keep an eye on them until really it's time to get back into the index shorting market. Same thing for the Russell. A little update on the Russell, like keeping an eye on it. 1605, it still hasn't closed above it, a monthly defined close, so it could turn back down at any moment. It's still creating divergence with the SPX in the Dow Jones and the Nasdaq. So that's bearish omen, bearish divergence, higher highs on its peers, but it can bring along the Russell. So all that weight of evidence. Keep busy, keep learning, keep monitoring all that, and hopefully that'll permit you to choose the A++ setups, guys. All right, that's it. Ciao, guys.